Hello traders, today's theme is the next drop. I believe that the second shoe is going to drop and that the market is going to stage a leg lower. I don't know exactly when that's going to start. We don't have a lot of news pending this week, so not a lot of drivers. Let's take a look at my most recent pick. That's how all these videos go. I start with my recent pick so that you can gauge the accuracy of the system. It works fantastic. All you have to do is go back and look at my prior videos because that's how I start each one of them off. And you're going to see consistent winners after winners after winners. This is no different. If you're making money on these trades, please give the video a thumbs up because that's going to help me reach a lot more traders. And that ultimately is my goal. Pepsi, PEP. That was a short that I gave you during the live event on Wednesday with Harry. Please make sure you watch those live events because they are absolutely packed with educational content. I kind of get into my routine when I record these videos, but when we do a live event, I get a ton of questions and I never know what they're going to be. Chances are you probably have the same questions, but you can see how Pepsi has been continually drifting lower. This was our live event here. Full disclosure, I am short Pepsi for a longer term swing trade. Stock has continued to drift lower. It looks great. It's not a fast mover. So if you're looking for a fast mover, you're not going to find it in Pepsi, but it will be a nice consistent grinder for you. So that was a good short. I didn't have any strings attached to that one. I just liked the short. We were pre-Fed announcement on Wednesday. So we had a chance for an explosive move. So we were kind of tooling up for that. I gave you two other picks in the event that the reaction was super bullish. I gave you IBM, and I had mentioned that it needs to get through this horizontal resistance and AVWAP-E before we can consider it. Look what happened Thursday. Whoosh! Well, where did that come from? That doesn't look like relative strength to me. The government is canceling a lot of their contracts. IBM and ACN both fell on that news. So you can see that drop on Thursday. It has recovered a little bit, but it certainly didn't get through AVWAP-E, and we certainly didn't have a bullish reaction to the FOMC statement, at least not one that I would sink my teeth into. We'll get into market analysis in just a second. So there was no reason to get into this trade. The other one that I gave you was OKTA. We also had to get through technical resistance on that as well. Please watch the video. I made those instructions very, very clear when I told you if we get the big breakout after the FOMC statement to the upside, this stock needs to clear that horizontal resistance. If it can do that, it's already shown that it can hold the gains from this post-earnings gap and that now it's going up and challenging that high. So I like the stock, but it's got to break out before I have any interest in it. So let's go back and recap the trades that I gave you the prior weekend. One was COF. That's the one that I had mentioned to you to buy the option spread that expired Friday, buying the 175 calls, selling the 180 calls. I was able to do that Monday morning for $1.10 debit. And we had some news that hit that stock during the week, which really kind of looked like it was going to throw a kink into our plan, but the trade actually worked out quite well. So here we go, Monday morning, everything's looking great, great, great. I get in right here. Oh, this is fantastic. And then what the heck was that? Well, they have a merger agreement with Discover Financial Services, DFS, and the Department of Justice said that they feel that this would be anti-competitive for the segment of the credit card industry, that subprime area of the credit card industry. And so this news hits and the stock drops about $12. Well, I watched the price action on Monday, and it told me that the stock had found support, that this was likely to be an overreaction. I made about 15 cents on it on Monday, but my spread was underwater. But the big drop put it on my radar. And so I didn't hesitate when I saw the market down Tuesday morning and the stock inching higher. I was able to make a couple dollars just trading the underlying stock. So in essence, my spread was more than free, and I didn't have any issues hanging on to it. You can see this is the post FOMC reaction, and I know that you could have gotten out of that spread for at least a 50% profit, at least. And then you can see the stock traded as high as $176 on Thursday. Again, I looked at the spread. It was bid at about $1.60, $1.70. So I know you could have made money on this trade. It was a really nice one. We had a little kink early in the week, but that actually presented an opportunity. And that's something that we covered in Wednesday's live event. Oftentimes when you're in a trade, you'll get blindsided by news and you think, oh, poor me, I'm losing money on this trade because this stupid news came out. That news is new information for the company, and you've got heavy volume and movement. So stay flexible. Oftentimes you'll find, like it was in this case, that it's an overreaction, and you'll have a really good trading opportunity on the upside. Sometimes the news is legitimate. It's like, wow, that's really pretty bad news for this company. This stock, it should continue to drift lower. And then in that case, you get this big drop, but you see the stock continuing to drift lower. That's going to be a good short, especially if it's broken major support levels. Go short. If you can see that this is having a material impact on the company and that the selling pressure is heavy, it's okay. Take a contra position as long as you have technical confirmation. So we're not talking about revenge trading here. Any new trade has to stand on its own two legs. So that's just some helpful information for you. When you get caught in a trade, it's not the end of the world. There's nothing that I could have done to predict that this news was going to hit the market. There was nothing I could do. Okay, well, then don't beat yourself up. Go with the flow, evaluate the information, and see if there's something that you can make out of this trade. And I'm not into doing big trade adjustments, by the way. Let's say that you're in a stock, and let's just take a bullish put spread, for instance. You sold a bullish put spread way out of the money. Stock has been strong, and I'm not talking about the market starting to roll over and be weak. The stock starts to show some gradual weakness. There's no news behind it, but the stock is drifting lower and lower. That's a completely different instance. You were wrong on the stock, and in those instances, you need to close the trade down. That's what you have to do. So there's selling pressure. You don't know where it's coming from. You don't know why it's happening. You just know that there are sellers. Okay, I made a bad decision on that trade. I'm going to close it down. I'm going to cut my losses, and I'll move on to the next trade. But when there's news, there's typically a discovery phase, a discovery process, and you're going to see some really decent movement in that underlying stock for 2 or 3 days. That is going to present you with an opportunity. Enough time spent on COF. MSTR was another one that I had mentioned you might want to keep an eye on from the long side, pre-Fed, and you can see how the stock really rallied up to 310 from, is it about 290 Monday morning. So made a really nice move. That was a decent long as well. Stay flexible right now. Take a look at the market. We'll see what it's doing. I'm a little bit disappointed because I felt like last week we had a really good chance for the market to move. We had big news pending. We had the Fed statement on Wednesday. And so when we came in early in the week, I'd mentioned to you, I really feel that the odds for a bounce in here are excellent. And the reason for that is that anybody that's short in here, some of this is going to be natural selling. Some of this is long-term money, taking risk off, getting into risk off mode. So we know that. That's cool. Some of this is speculative. How much of it is speculative, we don't know, but some of it is for sure, especially on this break below the 200-day moving average. Okay, well, if you've got big news coming out, we've had lower inflation numbers, PPI and CPI. We've had some softness in the labor market. Okay, Fed's projections for Q1 GDP are minus 2.5% last time I checked. Okay, so they've got softening labor conditions. We've got inflation coming in. They should have plenty of room to ease. So I'm thinking, okay, this should be a pretty dovish Fed statement. Other traders who were short early in the week would feel that same way, that, you know what, I've had some really decent gains in here. Why don't I take some chips off the table? I don't need that binary risk of the FOMC statement, so I'm going to take some gains. And we did get a bit of a bounce in here, but it was really unimpressive. No volume, choppy mixed candles back and forth, not the kind of buying that would tell me that people are scared out of their short positions. Absolutely not. And there's a couple of explanations. One is that there wasn't that much short selling. I believe there was a fair amount of it, so there's not a lot of short covering. The other would be that the short covering that took place was barely enough to offset longer-term natural sellers, those long-term asset managers who are in risk-off mode. We're selling into those bearish speculators who were covering their short positions, and that's why we didn't get any lift out of the market. And I expected to see that Monday morning. I expected to see it Tuesday morning. I expected to see some of it Wednesday morning. We had a quadruple witching coming up, which adds volatility to the market. And once they would get that buying going, I felt that it had a chance to feed on itself, because then they would start running buy programs, and we had a nice chance to possibly even test the 200-day moving average. Well, what's happened around that 200-day moving average? You see these long wicks? Wham, wham, wham. Every time we get close to it, we start to see some selling pressure. Go into the 30-minute chart, and there we can see. You get up near that 200-day moving average, blam. Get up near that 200-day moving average, blam, blam. So Friday, we didn't get anywhere near it. We gapped down, and the market was able to recover a little bit, but this is unimpressive for any kind of bounce. And after a big market decline like this, you are in a bullish market going to typically see some really big snapback rallies. And when they start, they don't stop very soon. They keep going because there's a lot of short covering. When you don't see the bounce, it tells you that sellers are still in control. And that's what we've been waiting for. We've been waiting to see what kind of bounce is this FOMC statement going to produce. Well, the Fed said, basically, we're happy with our policy right here. Yeah, we see economic conditions softening. We actually think that inflation is going to be ticking higher. Stagflation, not a good backdrop for the market. So, higher for longer. Maybe you would have thought that the Fed would increase the odds from 75% to 100% that there's going to be a June rate cut. They would have done that through more dovish statements. Didn't happen. Maybe they would hint that there would be 3 rate cuts instead of only 2 this year. Didn't happen. We're happy with our current policy, higher for longer. Central banks around the world have been cutting interest rates. They're much more fearful of what they see in terms of an economic decline than they are about inflation, but not our Fed. Okay. Market did not bounce very high. It did not last very long, and you can see how we're starting to roll over a little bit. Okay, so I am looking on the bearish side this week. I believe that the market is going to have another leg lower. The problem with this is that short term, I feel like there could be a bounce in here. Something could happen. I don't know what news is all of a sudden going to excite buyers. That opportunity, that window came and went last week. So where's this excitement going to come from? I don't think we're going to see any. We still have plenty of uncertainty. And that uncertainty is the tariffs that are going to be enacted and the reciprocal tariffs on April 2nd. Okay, so that could weigh on the market. I think we're going to start seeing some weak economic data points over the course of the next few weeks. So if we get a nice big bounce up to the 200-day moving average, as a bearish swing trader, I have to mentally prepare for that. And I'm willing to take that risk because I see the odds of a market pullback as being much greater than the odds of a market rally. And I'm not going to expend all of my energy. I'm not going to back the truck up and load up on bearish positions right now because I don't have that level of confidence. But taking bearish swing starter positions here, now, yes, I feel very comfortable with that. And if we rally up to this 200-day moving average, and if we do so in a wimpy fashion with light volume and mixed overlapping candles, maybe as we get closer to earnings season, things start to look a little bit more optimistic. I'm not buying it. I'm just trying to find some reason that the market might possibly get back up to that 200-day moving average. If it does and it fails and it rolls over, guess what I'm going to do? I'm going to add to my long-term bearish swing positions at a better price. Okay? I don't typically like to add to losing positions, but in this case, I also feel the odds from right where we are, right here, right now, the odds are probably better than 50% that we have another leg lower and we take out this low from March 13th. So I'll just drop a little horizontal alert line there. I believe at minimum we can test this level, and if we do, we will break below it. That's what I'm looking to happen. So don't see a lot of negative news, but the potential for positive news has come and gone, and that is going to make bearish speculators more confident. They will be emboldened because this potential speed bump for shorts has come and gone. And so you still have longer-term asset managers reducing risk. So that's basically where I'm at right now. Short-term, day trading. If you're day trading, you kind of have to see where the wind blows right now because we're getting nice long candles in here. Some days, market's been pretty decent. We've had good opportunities on the long side, and on these long candles, you can see the market tends to open on a long candle and then follow through all day long. So lots of selling pressure, lots of selling pressure. Here you open here, you're going to have lots of buying pressure. Be flexible, okay? There are going to be some good longs out there. There are going to be some good shorts. Day trading is kind of one day to the next. You have to evaluate where the market opened within that prior day's range. If it's an inside day and you're inside of that range, you're probably going to have a low probability trading environment. If you can break out through that range, then you want to watch to make sure that there's some decent volume and that move is sustained. So the prior day's high and low, as always, are your first support and resistance levels. And for us to have decent day trading conditions, you got to move through those levels. Then we can start thinking about a decent trading day if that move looks sustained with nice consecutive candles of a single color on volume. Great. be flexible, go with the flow. When it comes to swing trading, when it comes to day trading, and I see a nice rally on the open, if I see a gap up, what am I thinking? Pete is bearish on a longer term basis. He would prefer to be short than to be long. So that also comes into play. So I'm fairly bearish. You know, I've been bearish since back in here. This was back in early December, December 6th. That's when I came out and told everybody to go to the sidelines. What I see coming, I don't like. And so I look at global growth. That's the main thing I'm looking at right now. And tariffs or no tariffs, I don't care. The global backdrop has been deteriorating and it is continuing to deteriorate. So where's all this growth going to come from? I'm not seeing it. I'm looking at the short side. So that's how I'll be trading this week. There really aren't a lot of economic releases that are going to have much of a market impact. And I'm going to go into my Red Royal Flush search. Actually, I'll go into heavy selling because there's a stock I zeroed in on. Full disclosure, I am short Starbucks. This is a longer term swing position for me. So I like Starbucks on the short side. And you can see how the stock had sold off dramatically. This is a 15-minute chart. Had a nice little bounce. This is what the market's done. Decent bounce, really decent bounce. This stock got hammered on Friday and it never recovered, but the market did. So let's zoom in and see what it did on a 5-minute basis, and then you'll be able to see that relative weakness. When I overlay SPY, you can see that the market bounced nicely and the market actually closed on its high of the day. What did Starbucks do? Gap down, didn't get anywhere close to its high of the day, didn't get anywhere close to filling the gap that it had for the day. Relative weakness. This is a nice short. And if you take a look at a lot of the other restaurant stocks, consumers are cutting back right now. Retail apparel, any consumer type of stock, they're actually hitting some pretty hard times right now. And there's a good chance that people will stop buying their $5, $6, $7 a day coffee, and that they'll maybe start making their own coffee, or they'll give up their coffee. They're going to find cheaper alternatives. And Starbucks has had decreasing same-store sales of 4% globally when they last reported. And I know that they're struggling in China, which is their second largest market. So I like Starbucks. I think it's a good short. I think if you take a nice little short position right now, just put a starter on, know that the stock could rally a little bit. This is a bearish flag formation. There's your flagpole. There's your little bounce. Now we've reached that upward sloping trend line. There's your bearish flag. I believe the stock has the potential to get down to the 200-day moving average. That's at about 93.72. That's about $3.50 down from where it is currently. These options trade with a fairly low option implied volatility of 28. If you're going to be buying options, buy them with 3 months worth of life. Go past the next earnings release. Even if you don't plan on hanging on to them that long, they're going to retain their time value and their option implied volatility well because they span earnings, go in the money, a delta of 0.7 or higher. You're just looking for a surrogate stock position. Think long term. Do not buy weekly put options at the money or out of the money on something like this. That is a foolish trade because you're fighting time premium decay, and this stock doesn't always make very big moves. So when it just sits and pauses, you're going to lose money on that trade. You're going to look back on it and you're going to think, gosh, if I just would have given myself 3 months like Pete said, I would have made money on this trade. But I wanted to buy a lot more put options, so I bought weeklies and my money just went poof. Don't do that. Okay? Don't buy short-term options. Those are the ones that we want to sell. We want to take advantage of accelerated time premium decay. The only exception to buying short-term options is when we have monster moves like this breaking through major support levels, not this choppy back and forth garbage where you could spend a week or a month trading in a stupid trading range like this. Okay, this is where you are going to burn through capital like mad buying weekly options. 99% of the time, buying weekly puts and calls is a losing proposition, and you should not do it. Enough preaching for today. Good luck with your trading, everyone. Please subscribe to the YouTube channel. I'm going to be getting a video out sometime this week. It'll have a pick in it. I mean, if you had your notifications on, you caught that Pepsi trade. That was a really nice one. The week before, I had a really nice trade too. I can't recall it right off the bat. Maybe it was PLTR. That stock has actually done really well. But turn on your notifications, subscribe to the YouTube channel, and please tell other traders that, hey, this guy actually knows what he's talking about. You might want to check out this YouTube channel because he's got some pretty good trading ideas and he explains the logic behind every pick. Thanks so much. Have a great weekend. We will see you Wednesday or Thursday. I'll get that video out. Thank you.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.